Hey everybody, Jeremy here with Escape Velocity Trading. So I've been getting asked a ton of questions about cryptocurrency lately, and especially Bitcoin, since it has just had so much publicity over the last month or so since the spot ETF approvals. So the short version of my analysis is that I expect pretty much every consolidation or pullback from the daily chart perspective for the next few months to be a back the truck up and buy moment. This is because the chart is obviously in a very strong bullish uptrend, and we also have an insanely bullish thesis driving the current price action higher. So to identify what price levels to watch for moving forward, let's break this down from both a thematic perspective and also a technical analysis perspective to see what is driving the price action. Be sure to stick around to the end of the video for a sneak peek because I'm going to show you my personal trading system that has allowed me to lock in over $20,000 in short-term profits in just the last week of trading Bitcoin futures alone, and is actually setting up and potentially breaking right now as we speak before the market opens here in about 15 minutes for another banner week. So stick around to the end to see that. So from a thematic perspective, I can't conceive of any reason why Bitcoin won't head higher in the coming weeks and months. I have spent basically the last 10 days racking my brain trying to think of a reason to poke a hole in what I'm about to share, and I have not been able to figure out anything that might take the air out of this massive move over the next few months. So let's bullet point the massive positive themes that we have currently for us. First off, as previously mentioned, we have the recent spot ETF approvals that have been long awaited by the market. Bitcoin price ramped up significantly in the weeks leading up to the ETF approvals based on the idea that these new ETFs would finally give institutional investors access to Bitcoin, and that there was likely a huge pent-up demand for this. I was personally in the camp that this was going to be, in the short term, a buy the rumor and sell the news event, meaning that after the approval actually took place, I was personally expecting profit taking to occur with a significant pullback into prices at support level, uh, basically with people taking profit at the high end of the chart. And we did end up getting that pullback. It did materialize right after the ETFs were approved, but much of that selling was actually due to Grayscale's GBTC ETF shares that were getting sold off huge by FTX, which was a Bahamas-based crypto exchange that was forced to sell all of their holdings of GBTC due to settling their bankruptcy. So now that that selling pressure is basically over, there has been very little other selling pressure on any of the new spot ETFs or on Bitcoin directly. So that has been a huge bullish thesis for that selling pressure to now be abating. Second, we have Bitcoin's upcoming halving event. Uh, so this is expected to take place sometime in April of this year. And due to the mechanisms that were created when Bitcoin was invented to max out the total supply of Bitcoin that will ever exist over time, Bitcoin periodically goes through halving cycles where the amount of newly minted Bitcoin awarded to miners for each block gets cut in half. This effectively means that there will be 50% less Bitcoin being added to the available circulating pool for trading moving forward. Now, supply and demand tells us that when supply gets cut, all else being equal, the price should rise, right? Third, in addition to that 50% supply cut, we have a massive increase in demand coming in. Many retail investors haven't wanted to open accounts with crypto exchanges for various reasons, so they have only had indirect access to the crypto market through a limited number of proxy stocks such as Coinbase, or publicly traded miners such as Riot or Mara that track Bitcoin's performance due to the large amount of Bitcoin that they hold on their balance sheet as assets. But that's changed now with the spot ETF approvals. And on top of the retail demand that's coming in, the big financial institutions that now offer these new spot ETFs on Bitcoin have to purchase a large percentage of Bitcoin to back the new ETF shares that they create. So they have to buy a ton of it to own and control. And they have been buying huge amounts of Bitcoin every single day since that launch. The demand from these institutions is so big, in fact, that they are currently buying more Bitcoin than the miners can even create to add to the liquidity pool on a daily basis. So just think about that for a second. In the last month alone, the spot ETFs are collectively boasting over $10 billion under management, with recent daily inflows on February 15th reaching over $1 billion worth of accumulation in a single day. Fourth, taking a step further, as of February 15th, spot ETF for Bitcoin has attracted more net inflows in the previous 4 days than the entire last 4 weeks since the spot ETF launched. According to data from Bitcoin tracking platform Apollo, the top 10 spot ETFs have generated over $43,000 Bitcoin worth over $2.3 billion at current prices. And these inflows are continuing to increase exponentially. Fifth, the amount of Bitcoin held in known crypto exchange wallets has recently dropped to its lowest level in over 6 years. And this suggests that those that are investing directly in Bitcoin are pulling it off of the exchanges where it's liquid and easy to sell if they need to, and putting it into private wallets for longer term storage. This means that if these people want to then sell later, they would have to then transfer it back to the exchange and then sell it. So people look at this as a metric that indicates people are intending to hold their Bitcoin long term by pulling those coins to private wallets, because it creates an additional hurdle for them to then liquidate those assets later if they decide to. And then finally, sixth, as of March 2023, over 19 million of the 21 million Bitcoin that will ever exist had already been mined, meaning there was less than 2 million left, or 9% of the total supply that will ever exist, that still are coming into the circulating supply. And that has been almost a year ago. That figure, since that was published, is much, much smaller today than it was March 2023. So to sum it up, the insanely bullish thesis behind Bitcoin, it's a new game now that institutional investors are involved here, and the supply and demand curve is working heavily for the bull's favor. I don't know about you, but that by itself seems like a pretty damn good reason to have some exposure to Bitcoin in your portfolio. But now let's look at the technicals, the price chart, to see what, in my opinion, is just as bullish and just as supportive for future price increases. So let me go ahead and share my screen here, and we will dive into that. All right, so this is looking at a 4-hour chart. Let's back out to a daily chart here. So on the daily chart perspective, we were obviously very overextended. And a few days ago here on this little doji on Thursday, the 15th, I said, this needs time to cool off. I'm hoping for a pullback into like the 49,000 to 50,000 level, which would correlate to the rising 9 EMA here. You can see in this kind of pinkish line. We got a pullback, but if we now drop into the 4-hour chart to look at that a little bit closer, the wick low was right here yesterday on Saturday at 4 a.m. and it came in at 50,647. That was the wick low, and that looks to me like it is going to hold as the low for this pullback. It is already breaking now, just in the last hour, the diagonal resistance line here that we have held since the pullback began, and this is your first aggressive entry trigger. The second entry for this would be if we break the previous pivot high wick here, which came in at 52,884. So if you're an aggressive trader and want to get in right now, it has already confirmed to the upside on an aggressive stance. The next trigger is going to be breaking this high point there. And honestly, I don't see any reason why this next push wouldn't get us up to this 56,000 or maybe even 57,500 level. And if we back this out to a weekly chart to look at it real briefly, past that, it is basically all-time highs. If we can get up to 57,500 and either flatline there, have a high base or consolidation for a few days, or have a pullback again to reset the price graph, coming back down into the 53 or 54 level potentially, that would be setting us up, in my mind, for the next push up to all-time highs. And I am expecting that we are probably heading to all-time highs in the next couple of months between now and the April halving event. So, with all of that said, now let's go over, and I said I was going to show you a little bit about my futures trading that I've been doing. And I'm going to keep this real quick because we actually only have about 8 minutes till futures open, and I am planning on diving into a trade right at the opening bell. So I will keep this quick. Looking at the daily chart, if we go out to the daily chart on Bitcoin, two of the things that I absolutely love to use for my analysis, Bollinger Bands and this trailing ATR stop indicator that basically plots a dot on the chart, 1.3 ATRs, average true range, below the current price action. If you're not familiar with average true range, basically it is just an indicator that tells you averaging over the last 14 candles, so in this case, over the last 14 days, how much per day on average does the price move? That's all it is. It takes the price action in the last 14 days, average it, and then gives it to you as a number. So you can see up here, I have my ATR indicator that says $17,032 is the average Bitcoin move. So then this dot is plotting 1.3 times that to give me a little bit of a buffer so that I know that anything above this most recent blue dot, which is currently basically right at 50,000, is remaining bullish. So I love that. Love the Bollinger Bands. We are obviously in a very strong uptrend here. We have been grinding on the upper Bollinger Band for a while, which is why a few days ago on Thursday, I called saying we need a high base or something to let this moving average catch up a little bit. But we have just not wanted to sell because of the bullish thesis behind everything that I just described. The selling pressure is just simply not there. So looking out to a weekly chart is kind of the next guess in terms of where price is heading. And if we look back at the amount of time and the distance that this price ran and grinded against this upper Bollinger Band, I am expecting this to be a very similar move. I'm not expecting us to touch this Bollinger Band and immediately pull back like you would in a normal market condition. I am expecting this to continue to go up and expecting for us to top out, like I said, on this next run around 57,500 down to maybe 56,000. So somewhere right in that range is where I am targeting. And now here is the really cool thing. So anyone that does futures knows that there is a lot of leverage in futures. It is a high risk, high reward type of trade. So you have to know what you are doing if you are participating in the futures, and you have to have enough funds in your account to be able to play futures. If you can't do the Bitcoin futures, which is /BTC, there also are mini futures, which have a smaller contract size to allow you to participate with a smaller account value. So know that there are mini futures as well for people that have smaller accounts and want to participate still. But with that said, this next week, if we buy at 52,200, which is the current price, and we're probably going to be opening somewhere right around that price here in 4 minutes, you can see here I have the contract. I'm buying one contract at 52,200. This red line right here is my break even for the trade. I am going to risk probably about $3,500 on this trade. It's a larger amount than I do when I trade stock and options, but this is a fairly normal level of risk for me for the futures market, just because of how price action moves. If you don't have a buffer for that, you're just going to get whipsawed out really, really quickly. So you have to have an account that can deal with that kind of risk profile. But if you do, I'm going to stop out around 51,500, which on the chart is just below the low of this consolidation zone. And then check this out. If we go out to 56,000, which is my target, you can see right here, the number next to my cursor, that will be potentially a $19,000 gain. If we do end up continuing with momentum and we get back up to that 57,500 level that I am targeting as my upper end for this move, that is over a $25,000 gain. So with that, if you are participating in crypto, if you are interested in participating in crypto, you don't have to participate in Bitcoin futures. You can also participate in the new ETFs that have just formed. And if you are going to do that and participate just in shares, the current entry is somewhere around $30 or $30.23. And if we drop this to a weekly chart, you'll notice there is not much history here, but we would be targeting probably up to the $34 level. So with that, I'm going to wrap up, guys. My alerts are going off. It is time for me to go in and start strategizing on my trade. I will leave it at that. Hope that helps. Drop questions or any comments you might have in the chat, and I will get back to you as soon as I can.